webinar, we're going to talk with and to 3 different oil and gas income offset sponsors. So I want to thank you for joining. I also want to thank Ty Meadows from MDS for joining. It's a little bit of a fireside chat, no PowerPoint. We're not shoving anything down your throat. Full disclosure, I own MDS 2020, 2021, and the 2022 vintage. So we're going to review, and Ty's going to review past MDS performance, catch us up to what the outlook looks like for 2025. If you haven't noticed, the world's been a little bit, interesting lately. And I just want to get MDS's point of view. Their program for 2025 is open now, so he can talk a little bit about that. There's an early incentive, and he can just walk through all that. So without any further ado, I want to turn it over to Ty Meadows, my guy at MDS. I've called him, usually really good news and sometimes really good questions, and he always has the answer. So Ty, thank you for being here. And for those of you that are watching this on the replay, thank you for watching it. We're eventually going to have a library of these things that you can watch them on demand. We're working on it. I don't think that's ready yet. So for those of you that are on it, you'll get an email of the recording. For those of you that aren't on it but registered, you get the recording anyway. So we'll be doing that going forward. That way, if you can't make it, you still get the content. So Ty, why don't you catch us up with past MDS performance and catch us up with what we should look at today based on what's going on today.
Yeah, absolutely. Fred, thanks for having me. Thanks to all you guys for joining us today. Like Fred said, for a little fireside chat, little update here as to what's been going on at MDS. I pulled some quick numbers for you guys that I think you will find interesting. They're always on your monthly statements for those of you that are current clients. You can always find these numbers on your current statements, but just to give you some nuggets here as to how our past programs have been doing. For those of you in the 2019 program, that program's been in production for almost 60 months now. And it's been averaging on a return basis, it's been averaging about 1.8% a month. And all those wells are currently online and producing at normal levels. The 2020 program, that's been online for about 4 years now, averaging about 2.4%. And the 21 program is doing very similar, right under 2% average for about 34 months. All those wells, 19, 20, 21, all online and producing at normal levels. 22 program, that one, we largely brought it fully online last year. It's been averaging right about 1% for a little over the last 2 years or so that it's been in production. And then the most recent program that we fully, or that we just brought into production is a 23 program. So that program has 35 wells online. I believe it's distributing from about 21 of those 35. The remaining 5 to round out the 40 total that'll be in that portfolio should be online any month now. And that program's been averaging right under 1% for the 13 months it's since its first distribution. For those of you that invested last year, the 2024 program, we currently have 8 wells online in production, or 11 wells online and in production. That 24 program is going to make its first distribution next week. It'll be July 1st. That will come from the first 3 to 5 wells that we received revenue back from. We'll distribute those out next Tuesday, July 1st, and then your distributions will continue monthly after that as we work to bring on more of the wells and round out the portfolio, hopefully having everything online and in production by Q1 of next year. Last year, pricing was relatively down, right? Here in the Marcellus Shale, it averaged about $1.50 per MCF. We have here at MDS, we're considered a low-cost driller, meaning we maintain a really low break-even cost. Our projects now are breaking even at about $1.40 per MCF. And last year, for the 12 months of 2024, the market here averaged about $1.50. And as many of you know, we're not going to give our gas away. We have no incentive to do so. We are protecting the long-term return of all of our assets and ultimately the long-term return to everybody and all of our clients. So largely last year, we were running under curtailed production volumes, just selling into our favorably priced hedged contracts for the 12 months of 2024. And then towards the end of the year, we started bringing everything back online and started selling back into the spot market as we saw the upcycle come in the market here. And we've enjoyed really good pricing through Q1 and Q2 of 2025. And I think you guys have more recently in the last 3 or so months seen that reflected in your distributions. And when we look at futures pricing, at least for the next 8 or 9 months, I see some continued upward pressure on pricing to continue those healthy distributions. Now, as Fred said, our 2025 program is live. We are open. It will be the same type of program as we've done in years past. Really, the only difference is the physical assets we're developing, right? So the actual wells that we're drilling, that'll be the only thing that changes. All the mechanics, all the benefits of investing with MDS are still there and will remain the same. We're still targeting that 70% IDC deduction. That's your big year one deduction that goes in and offsets any form of income, truly reducing your adjusted gross income and, of course, reducing your tax liability to Uncle Sam. I'm going to give Fred a shameless plug here. I recently read an article he posted in Forbes, and it does a great job of walking through all the benefits of investing in oil and gas drilling partnerships and how they can positively impact everyone's portfolios. So if you haven't checked it out, it's a real easy Google. You can Google Fred's name and oil and gas in Forbes, and it comes right up. So that's a good quick read to understand the basics of it. And of course, for any more detailed questions or questions about the marketplace, I'm always at your guys' disposal. In terms of what I'm looking forward to, in the next couple years in the oil and gas space, I mean, especially here in Appalachia, in the Marcellus Shale, with regards to natural gas, we've had some pretty exciting things happen. One thing that's slated to come online is the Homer City power plant. For those of you that don't know, the Homer City coal plant was recently torn down, and they're rebuilding the power plant, and it will be 100% natural gas powered. Once it comes online, which right now they're saying end of 2027, I know how construction timelines go. Let's say it's on by mid 2028, right? That'll bake in some construction delays. However, this Homer City power plant that's going to be 100% natural gas fueled will produce 4.5 gigawatts of power. That's an equivalent to powering all of Manhattan. That will be right here in our backyard in Western PA. It's probably going to be about 20 miles from the heart of our drilling operations, and is estimated to consume somewhere between 700 and 750 million cubic feet of natural gas a day. That kind of consumption in this region should positively impact our regional spot pricing here that we see, which ultimately trickles back down to our wells and ultimately you guys as clients. That power plant, one thing I failed to mention, that power plant, when it does come online, will be the largest power plant in the country. So we're pretty excited to see that. And like I said, have that right here in our backyard. And of course, we're still keeping tabs on what's going on at the global scale with natural gas, just in the form of liquefied natural gas, right? Or LNG for short. As more development happens all across the world, and more countries are looking to import more natural gas. The U.S. as a whole is positioning itself to answer that demand bell, right? So right now we're exporting somewhere between 12 and 14 billion cubic feet a day. That's our capacity out of the Gulf Coast. By the end of 2028, that number is going to be up to 28 to 30 BCF a day. So what's happening is significant developments in the Gulf Coast to increase our export capacity. So the U.S. can move our gas all across the world and get it to those that are actually in demand of it, that want U.S. produced natural gas. And there's a lot of pricing arbitrage that takes place in the global markets. I mean, for example, in Europe, they're selling natural gas at 4 to 5 times what we sell it for here in America, right? So there's definitely some arbitrage to take advantage of. And ultimately, at the macro level, the global scale, all of those developments will trickle back down and positively impact MDS Energy as an upstream producer. So those are a couple of things I'm excited about going forward into 2025. If there's any specific questions about the 2025 offering, like I said, we are live. For those of you that have invested in the past, it's going to be very similar to our past programs. But happy to take any questions or open the floor for any discussions on anything in oil, natural gas, energy, MDS, you name it. I'm here for you guys.
Thank you for that, Ty, and thank you for the Forbes plug. I didn't ask him to do that. So one of the questions I know people had coming into this was the price point in which MDS says we're not even going to take it out of the ground. Is that, sub dollar, sub 50 cents? Like when you say low cost producer, that's a positive thing. It means you can stay in it more than the higher cost producers because they're going to tap out sooner. What is the ballpark number? Is that a number you can share with the investors? I know it's a changing with options and with hedges, but in general, as it gets lower, to what number do we is the impact that our assumption is MDS is going to turn the spigot down a little bit? Why sell it at a break even or even less?
Yeah, short answer. So our break even's $1.40 on the projects, right in that ballpark, give or take a few cents. A good benchmark is probably $1.70, $1.80 is where we're going to start on the spot market side. Is where we're going to start curtailing production, right? So, for example, last year where the market averaged $1.50, right, on the spot side, we never sold our gas below $1.70, right? So that's usually where we're really gonna start significantly pulling back. But in that price band is where you will see us moving our production largely over to only our hedged contracts, which are favorably priced to the market, and pulling our volumes off of the spot market. Because we know the market's cyclical, we know it's going to come back. So there's no benefit to running wide open at $1.70, $1.80 when we know it's going to come back.
Gotcha. And I know the natural gas price we see on Bloomberg is not exactly the spot price that is sold in Western Pennsylvania. Right. For people that want to see what that Western Pennsylvania, what are they searching for? Is there a website that has it, or is it such a unique? Is it hard to find out that information because barely anyone needs that information?
It is kind of difficult to find without going through a paywall, but it's called Eastern Gas South, is the local market here.
Okay.
That's what you want to look for. You want to look for the Eastern Gas South basis, right, which will tell you the discount that we sell compared to the NYMEX price, which is what you get when you Google natural gas pricing today or whatever. You're going to see the NYMEX price, which is the national benchmark based out of the Henry Hub in Louisiana. So that's typically going to be, let's call it 70 cents higher than what we're selling it here, but that basis fluctuates. And why I'm excited, what I talked about earlier with that power plant coming online, why I'm excited about it is that should shrink that overall basis. just based on the amount of consumption that power plant's going to have. But yeah, it's tough to find. I know some folks have access to like a Bloomberg terminal or something like that. You can find it on there. Outside of that, you usually have to go through a paywall.
Gotcha. Or just wait until they get the statements and you find out. And I think the other thing that I want to review with everybody is whatever MDS sells natural gas for today won't show up to the investors for about 4 months. Is that still the lag between getting out of the ground, doing what needs to be done, put it on the exchange, actually selling it, actually getting paid? That's about a 4-month cycle, correct?
Exactly. So what the distributions that just came out in June, that was for February production and pricing.
Okay, great. Is there anything that keeps you up at night? Are you bullish because of how expensive it is overseas and how much billions of dollars on the coasts of America to do the liquid natural gas? I mean, that's a great arbitrage. We get it out of the ground for $1 and sell it for $3, but over there we can sell it for $9, and they're still happy because they're not paying $15. That's a great. That math works out really good. Is there anything that keeps you up at night? Any headwinds you have your eye on that may, natural gas is the cleanest of the dirty. So I think there's a lot of things going natural gas way. But anything keep you up at night before we wrap up?
I mean, there's not much keeping me up at night except my 18-month-old daughter. But I get excited because when you look at the power stack that the U.S. needs to meet its power demands, natural gas is sitting at the top. And to your point, Fred, it's the cleanest of the fossil fuels, right? So I think when you see any type of development, like artificial intelligence, the data centers that are needed for technology and the AI development that's coming, and largely is kind of already here, those facilities need a massive amount of power. And the only fuel source that I see people using at scale is natural gas, right? So I think there's a lot still to come. I don't. When you look overall at the power stack, I don't think you're going to see a new coal-fired power plant coming online, right? I don't think a solar panel field. I don't think you could build one big enough to power a scalable data center. So I think for those reasons, not just in tech, but just as we move through, life in general, the human race is consuming more and more power, right? That's kind of a fact that hasn't changed, and I think natural gas is going to be there to answer that demand bell as more and more development happens, right? So that's kind of what I'm excited about, and I like to see it when it comes online and actually be able to quantify the difference it makes in the market.
Cool. So I can't ask you to be on the call without talking about, is there any initiative at MDS to try to get the K1s out sooner? And if not, walk us through. I'm sure there's a lot more than just pushing a button, or else you would have done it January 2nd. What is going on behind the scenes, high level, that not just MDS, but pretty much anyone with a K1, they're all coming out later and later and later, and they all have their own valid excuses. So from an oil and gas standpoint, what are the things you guys have to digest to make the K1? And is there anything you can do or your other vendors can do to kind of speed that up? Because I'm sure everyone, we're all waiting for at the end of the tax year, we're all waiting for the K1s to show up. And a lot of the oil and gases, including MDS, tend to be later in that spectrum of when they show up. Walk us through what you're going through there, because I'm sure you're not being tardy for a reason. Obviously, you'd want to get them out there as soon as possible as well.
Yeah, we do everything we can to get them out as quick as possible. Our goal is to have them all out by the end of March. So by March 31st, that's our goal. And we produce, close to 10,000 individual K1s on an annual basis. And before we can issue all of those to clients, all the programs have to be audited. So we have a third-party company that comes in and audits us. And then we have to, go through that whole process, which is very onerous and taxing, excuse the pun, on our accounting team. And then after that, we can submit all of the information to our CPA firm, who then has to work through it all and actually issue the K1s. So there's multiple third parties involved in the process, and we can't start the K1 process until the calendar year ends, right? So we can't really start it until that ends, and then the audits go through, and then et cetera. So we're getting them done as quick as we can. I always tell folks, we're largely not going to be the reason that anyone has to file an extension, but we're probably going to be the last piece of your tax puzzle to make that April 15th deadline.
Gotcha.
But March 31st is our goal, and I think for the large part we've been hitting that benchmark over the last several years.
Perfect. And I appreciate it, because if our choice is unaudited and rushed out K1s, that then there's a correction later anyway, or there's an audit on the investor standpoint because the numbers don't add up, I'd rather have it later and right than quicker and wrong. So
absolutely. Yeah. I mean, last thing we want to do is have to reissue K1s and correct.
Right. That's even more expensive because, of course, your accountant, will bill you for the next one too, as they should, because they had to do work and it was no longer good. I have no other questions. It sounds like there's nothing keeping you up at night that you haven't shared with us. I wanted to keep this, under a half hour just so people can listen to it. MDS is our pure play income offset, which is that 70% number Ty had said. It could be more than that. So, we all, including Ty, want to under promise and over deliver. And they're pure play from a natural gas standpoint. So for us, natural gas, we like MDS. We love the fact that the Snyder family is always a co-partner in these programs. And they're almost always the bigger investor versus any of our money. And when people say, do you have, money in the game? I have money personally in the last 3 years. But also MDS as a company has money in their project. Usually the biggest investor of the project is their own money. So they have skin in the game. And that's one of the reasons they were on our radar. Natural gas has come up and down, and it's a business that we don't control. And it's a business that sales are different month to month, just like any other business. But we, now that a lot of the things are trending the right way, I think most people think when they get into oil and gas, they get the write-off, and magically the very next month, 50 pipelines are perfectly drilled and it doesn't work that way. The reason you're getting the write-off is you have to do the development, and the development means there wasn't something there and now there is, or there will be, and that takes time. So you do get the year that you do it, you do get the write-off. MDS and any of the ones that we work with don't have unlimited equity. So walk us through a little bit, Ty. Is there an early incentive window? When is that window over? What does that window involve? I may not, I'm not trying to shake the tree to our investors, but if they were thinking of doing it and they have the cash now versus waiting 2 months, what would they lose if they waited the 2 months? Like, what's the incentive to MDS to get early investors? Why do you have an incentive, and what do the investors get?
Yeah, so we do offer an early investor incentive discount. And that's simply because we want to reward folks that want to invest early, and we need to have an idea of cash flow so that we can plan operations. With largely being a tax play, tax and income play investment, most people wouldn't invest until they had their taxes figured out for the year, which means they wouldn't be investing until November or December. We couldn't facilitate 200 to 300 million coming in the door in 60 days, nor could we efficiently plan operations. So what we do is, for the first 100 million that comes in the door, or until July 31st, we discount those units 7.5%. So for round numbers sake, if you were to invest $100,000, you're actually going to get an equity position of close to $108,000. And why that's important is both the shares of the tax deduction and the returns on a monthly basis. Those are all based on equity owned in the partnership, not cash contributed, right? So if you're paying less for more equity or units, that obviously increases the performance on the return side, but also increases the share of the IDCs up front.
Gotcha. So we have until July 31st until you raise $100 million, whichever comes first.
Yep.
All right. That's all I have. Any questions for us, Ty? You good?
I'm golden. You guys,
All right.
you guys always take care of me, and I appreciate your partnership.
And catch us up with your 18-month-old. What is she doing now?
Oh, she's a ball of energy. She's running all over the place. She's this close to talking. She's gonna have a lot to say when she figures out how to pronounce all the words. But,
Well, mine just turned 13. They work today for half day in the office.
that's awesome.
They're both taller than me, which doesn't take much. And you can't shut them up now. So enjoy the fact she can't talk yet, because once she does, you're never going to stop it. Never want to stop it, and you're never going to stop it.
I'm looking forward to it.
Ty, thank you very much for your time here. Any questions that people have that anyone had that didn't get to answer it, shoot me an email, shoot Derek, Christian, your whole team's here to support you. If you're already an MDS client and are considering more, talk to your team. We can figure out what needs to happen. If you're not an MDS client and you have income tax that you don't want to pay, talk to your team. We'll see if this makes sense. We'll do a math. We have a worksheet we can do that will kind of do an illustration as if you did do it and if you did it in different increments. This isn't a I want it, here's my money. It's a I think I want it, let's figure it out if it makes sense type of investment, because these are not things you're going to unwind tomorrow. You're in it as a partner for as long as the money is in it in the land. So these things, I tell everyone you should be made whole in 5 years or less. It's never taken that long with any program, including MDS, and you'll be paid for decades. Potentially after that, not as much in the beginning as the end, just like the air comes out of your bike tire more in the beginning when you have a nail in it versus the end. But these are recurring revenue, monthly paid. Like there's a decent amount of income that over and above the tax benefits that you get. So if you're making a lot of money in income, there's not a lot of leverage you can pull other than maxing out a 401k. But that just gives you a bigger tax bill later. This is one of the few things that as long as you're accredited and you have the cash, that you can do to mitigate some of your income from a large income source. So Ty, thank you very much for your time. I'm still early. All right. So gave everyone back 3 minutes of the half hour you've benefited or donated to us. This will have a replay that will go out to everybody. Thank you, everybody. Thank you, Ty. Stay cool, everyone, and have a great rest of the week. Take care, everybody.